What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a weekly charts analysis as well, which should drop tomorrow. And then also I do live daily market pulses at Hemi137 as well, so you can check me out there. But if you want to go ahead and get started and smash the like button before we take off, and then we'll go ahead and get this thing started. So this past week, there's been some really interesting information that's been going on. We are getting into that drought period in which there's a lot of new information out there. But what I've stated is since we started this year and started going into earning cycles this year, we are starting to see a massive acceleration from essentially Q4 earnings of last year reported in the first quarter of this year till now, is that we're getting a lot of major issues. So everything that was essentially promised in December of last year by Powell, of all these rate cuts, that we were having a soft landing, everything has been essentially walked back and things are getting worse. So with that being said, we are seeing this being represented in all these earnings, and this is why I say earnings is so important. You can go off the data sets. The market will move off the data sets depending on what it is and what essentially the overall scenario is of the market during that time. But ultimately, the earnings are really going to tell you what the truth is on everything. So well, this past week, we still had some really interesting earnings that has gone on. We had obviously the biggest one we've been waiting for, essentially for this whole earnings, is because Nvidia is essentially taking over the spotlight from Apple, as it is making massive revenue over the past couple quarters. I've talked about this ever since they started running up, is the fact that chips are going to be extremely important when it comes to the whole AI space, AI infrastructure. Yes, I think they're a little bit bloated as of right now, but again, you also ultimately have to understand that it is going to be a very big, huge sector when you're talking about AI, and essentially how we are innovating and understand what that really means. It's new technology that we have no idea or can comprehend what it's going to do to our life and lifestyle. And we're starting to see that with Chat GPT. We're starting to see that with a lot of art. That's just the beginning of it. There isn't a lot of use cases right now. Palantir, I've always said, has a good use case for AI. There's still a lot of other things that can be created, and you have to start thinking about humanoids as well, and where that whole potential scenario can play out. FSD is huge, and those are the kinds of things that you need to be paying attention to and understand where this is going. Now, again, the record Q1 2024 revenue of 26 billion, up 260% year over year. And they also announced essentially a 10-to-1 stock split. They also increased their dividend, but their dividend really isn't anything to even discuss. So anyway, but with that being said, I mean, the CEO came out. I love the guy just as much as I love essentially Elon Musk as well. But Jensen is a phenomenal CEO, and he definitely has respect of many of the big CEOs like Elon and Zuck. All these have his interest, as these chips are going to be very important in driving innovation and essentially driving the way we live our lives, right? And ultimately understand this is where it starts. It starts with infrastructure, and it's going to take a while. A lot of people are comparing it to Cisco as well, and Cisco is completely different. This, you have to understand that the chips are going to continue to evolve. They're going to be more energy efficient. They're going to be a lot faster. These companies, if they want to stay relevant, they're going to have to stay up to par with the chips, and understand that to integrate these chips is going to be a lot, and you're going to have to be heavily reliant on Nvidia. And a lot of people are saying, well, a lot of these other companies, they're going to take the space of Nvidia has essentially owned the space. They own like 85 to 90% of the space in itself, and no one's even close. It's kind of like Tesla when EVs first came out. Yeah, there was a lot of people that were in the game, but Tesla owned the mass majority of it. And so that's where you're going to have to look at Nvidia, and Nvidia has essentially made the same move that Tesla made just a couple of years ago. And understand there's still a lot of hype around it. I still believe it will have a lot of years to come with growth. But again, ultimately understand as well too, at some point, the biggest concern with Nvidia is resources, and again, understand where Taiwan is as of right now. And there's been a lot of, again, news around Taiwan, and essentially China essentially has been blockaded Taiwan from all angles. And so it's quite interesting what may go down there. Now they were discussing about essentially the chips, and how if it was to ever get invaded, that they can essentially, I guess, disable the chips so they're unusable. We do own the IP rights, but ultimately understand that we're just there really for the cheap labor, and they were already trying to move those facilities here within the United States. So that's a lot of information there, but Nvidia did very well, and I do believe, at least in the next couple of years, they'll still continue to do extremely well. I do believe they will get to a point to where we're already kind of seeing resources being hampered down a little bit right now. But again, ultimately understand that it's going to be a bigger issue moving forward. So with resources. So with that being said, we also had Target this week, and this is one we've been seeing a trend through a lot of these big name companies. When you start talking about value, Walmart did really well, but they also have a lot cheaper products than Target does, right? And you have to understand that, like, Home Depot has been suffering. Like, people don't have excess cash. We've seen Starbucks get absolutely hammered. And then you look at Target, their 3% revenue decline due to customer weakness. CEO has decline reflects continued soft trends in discretionary categories. We've talked about discretionary spending and how people just don't have the excess cash. The fact that they're either one splurging on a Netflix subscription and extra groceries is where their money is going. And understand that even their grocery bills are coming down. They've also discounted about 5,000 items, trying to get people to purchase their items now. And then you also have McDonald's come out, they're trying to offer a $5 meal. They're trying to get people in. They're losing business very badly. And again, this is all because of wage increases. People want wages increased because inflation's going high. But the problem, again, with that being, is that you start really digging into the margins of these companies, and they can't operate, right? They can't expand their growth, or they can't do anything. So it's very hard to be able to increase wages, or being forced to have to increase wages when they themselves are also battling inflation as well. So you have to understand a lot of these things, and this is why you see essentially the deflation essentially in a lot of the products that you buy, right? So very, very interesting times. But again, a lot of things that we're seeing does very much reflect what I've been talking about. I do believe AI will start taking over a lot of these jobs that nobody wants, because again, wages just aren't going to be there. Again, these companies still need to remain profitable, so if they can essentially pawn that off, spend the upfront cost to be able to get AI in place or humanoids in place, right, that they would alleviate a lot of their expenses, right? And understand that they don't have that ongoing having to pay for healthcare or any of these other benefits. They have to spend a little bit for maintenance for humanoids or their AI, whatever the case is. But that's where we're headed, because it's a much cheaper solution to keep these companies profitable. Now, also this week, we had the Fed minutes. I didn't really talk about this last week. I really wasn't expecting it to do a lot, but this week they, again, were really hammering the fact. And now this is why it's very hard to keep track of what's going on. If a lot of Fed members are giving you, oh, no, it's good one week, and then no, we're going to have to start raising interest rates. Now we're going to get some cuts. So they bounce back and forth all the time. And then the Fed minutes are essentially saying that various offices mention raising rates if inflation warrants it, and disappointing inflation data in Q1 of 2024. Now, Powell has talked about this, that he wants a full quarter of inflation to really dictate the direction of where they're going to go. And I believe that what's going to happen is you'll get a major event. I keep talking about this. A major event will arise, and it will force the Fed's hand to quickly start cutting rates. That's when you start pricing in a recession, is when these rate cuts start coming fast, because whatever that issue is, that main event will start hitting the main wire, and then there'll be a lot of fear in the market. And again, we're walking on eggshells, and I try to provide this information so you can see it coming. And a lot of people say you can't predict a black swan. Majority of the time, you can see a lot of the potential black swans, but you don't know if they're going to play out. So it's good to be aware of that. so you know how to adjust your risk. And this is why I use the analysis and why I use technical analysis as well, because when you're on technical analysis, you can't see these black swans, right? And so as long as you're doing some form of analysis and reading headline news and be able to decipher what actually holds weight given the current environment and what doesn't, again, the weight will change. The distribution of that weight will change depending on what is going on in the current environment. And this is why I said, like, jobs numbers are going to be important. Core inflation is going to be important, even though they say PCE is going to be what the Fed is watching. Yes, that's good to know, but when it comes to the market, like, that's a lagged indicator for what happens with the core. A lot of this is very lag indicators, right? So yeah, you do have to keep that in mind. And then higher for longer, again, repeated multiple times. So if the Fed don't have to, I do not see a cut this year. Will they be able to do that? It's hard to say, because I keep bringing this up, is that you're seeing an acceleration in layoffs and essentially delinquencies and bankruptcies, foreclosures. They stopped reporting veterans foreclosures on homes or delinquencies on home payments, right? So there's a lot of things that are going on. Automobile, that's a whole other industry as well that's hurting extremely bad. And so you have all these other things that are stacking up, and people are, I have down here too as well. Let's read through some of these. 52% of adults cannot handle a surprise bill of at least $2,000. And this is why you're seeing essentially the administration paying off student loan debt, because if they had to pay that, you would get a lot more delinquencies, you'd get a lot more everything else. And another big question and another big thing is who is actually getting these student loans paid for, right? I don't think I've actually seen anybody step forward and say their student loans been paid for. So where is this money actually going is a good question to be asking. 56% of Americans currently believe we are in a recession. So even though we've been talking about it, we've started to see it. People are actually saying that we're starting to really become in a recession. I believe, like, we've been through some rolling recessions, and now it's getting a lot worse. And this whole quote unquote soft landing that they're promising is not going to happen. You just don't have the yield curve inversion. Once the yield curve actually gets fixed is when essentially the recession occurs, right? And so again, a lot of this stuff is very delayed reaction. So yeah, I'm not saying you can't take advantage of the markets when the market's pumping, because it did pump all essentially a vast majority of the back half of last year. But again, ultimately understand that it's still a lot of this stuff is still yet to come, right? Like, we haven't seen the full effect of what the rapid rate increases have had. And again, ultimately understand, again, that's very lagged, in that the Fed might actually have to continue to raise rates, because what is interesting is, again, they said that no, we shouldn't have to raise rates again, but now they're starting to grease the skids that no, maybe we might have to. But if you just adjusted the core inflation report to take out some of the more higher inflationary items to try to bring that down, because if I guarantee you, if that last inflation report of the previous week would have come in higher, we would have been in panic mode. But they adjusted the report days before that report actually came out. That was announced. And again, you can say whatever you want. You can say that I'm fear mongering. I'm not. I'm trying to give you insight into what's actually going on, because when the market corrects, you're like, well, why did it correct? That's such a black swan event. Well, if you know, you're not going to get every event given that, but again, you should have some sort of idea where it's coming from and what could potentially play out. So you have to know all different scenarios and avenues, what could potentially play out. Again, I don't like to project too far ahead, because a lot of stuff can change. So I look maybe 1 to 2 months out. 6 months, I think, is really, really pushing it. A year I think is, unless you're truly an investor, it's hard to really say. And you have to make a lot of adjustments on the fly when you're looking at a lot of these companies, because a lot of these great companies can go down to zero in a matter of 2 to 3 years. So again, you have to be constantly on earnings calls, constantly on or revising reports, and really seeing what's going on there. Now, 78% of asset managers currently say that the recession within a year is unlikely. So now you're getting asset managers, which is funny, because there's been some CEOs that have come out that have talked about a hard landing. And then you have some other people that are saying that there will be absolutely no cuts this year. which goes along with this. And then you have some other people saying that, we're going to get like a 45% correction in the market, 80% correction in the market. Some people are really assuming that the market's going to get hammered really bad. I do believe we have had rolling recessions, so I do believe we will get a correction. How much is hard to say. This is why I say you really need to be paying attention to have a list of some really well-known companies that are doing really well and their revenues are still producing, or potentially have a really, really, really good building something out, like Tesla. I always bring up Tesla, even though the numbers have been bad. As far as EV and a car company, they have done very well out of all the car companies. But also being said, you start looking at robotaxi and FSD, and that was another great thing that Jensen had brought up as well. That Tesla is by far ahead of everybody when it comes to FSD, and that Elon is pushing hard to push that in China to get that rolled out, because it's going to be much harder to roll it out in the U.S. But as of in China, that's something they want, and they want it now. They wanted it yesterday. And so these are things you need to keep in mind and be able to like forecast some of these things, because you have to, again, understand that Wall Street doesn't price this stuff in. They're not as good as you think they are, right? Like, they get a lot of information to try to give them a leg up, but they don't use but a fraction of that information. And so if you see value in something and you believe in it, then invest in it, right? Again, not financial advice, but that's just my belief, right? So upcoming events this week, we do have Memorial Day on Monday, so the market is closed. We do have the Beige Book coming up here next Wednesday, so it's going to give you insight into the next FOMC meeting. And then give or take, that'd be interesting to see how they take that. Again, I'm not expecting them to announce any kind of cuts. That's only going to come on a reactionary move. Rate increases. If we do get a rate increase, the market's gonna sell off. I don't think that's going to happen now. I think if we do, we have to get through this quarter. Like Powell wanted to get a full quarter full of inflation, so I think we're gonna have to wait a little bit more if they do decide to have to increase rates. So I'm not really expecting much from those notes, but again, you never know. And on Thursday we have the GDP numbers coming out, so that'd be important, especially because we had a big drop on the last one. It could provide a big intraday move. And then on Friday we have core PCE. Again, on a Friday, they're trying to move these PCE numbers to really show where inflation is at. It'd be interesting to watch and see, despite all these lines that are pulling everybody every which way. So June 12th will be the next monetary policy, and then we have core inflation also on June 12th. I don't know if that's correct. It's probably around the same. It might be on the same day. Normally they're roughly close to each other anyway. So core inflation report, and then upcoming earnings. I took a lot of these off. Again, you have to understand there's going to be a lot of earnings that continue to go on for the remainder of the quarter. There is Costco earnings on, I believe it was Thursday. That'd be interesting to give us more insight into the value type play and where the consumer is at. Be good to, I'll include that in the next weekly report and analysis and kind of go over what we saw there. But aside from that, there's not going to be any big earnings that's going to move the market unless there's some really, really crazy news, which can happen, but the odds of it happening is pretty low. Again, we have to wait till the next earnings cycle to get that front-runner news. And again, if any other headline news can typically move the market as well, so just keep that in mind. Again, a lot of the volume is dying down. A lot of these numbers are really died down, especially the SPX is way, way down. So if there is any crazy headline news that does happen, if we do have a black swan event, this week would be a fantastic week to take advantage of that in options, especially on the SPX if something does happen. Now, again, with nothing really happening, the market may continue to grind up, right? And then go from there. Now, we do have some events that could potentially, the GDP or the PCE could potentially give a good intraday move. But aside from that, the market is really done. It's just digesting. A lot of the volume has gone down. This is why you sell in May and go away, because a lot of volume has gone down. There's just not a lot of people around. So with all that being said, it should still be a very entertaining short week. Really looking forward to seeing what's happening, especially in June. There's a lot of stress on what could be happening in June. I know China also announced a potential attack on Taiwan in June, so We'll see if that's the case or not, because if that kicks off, they could bring a lot of concern about resources into the AI space and chips. So just be mindful of that. That may play out as well. That may be another scenario that plays out again. If it doesn't happen on U.S. land, the market really doesn't care. But if it does start affecting supply, you're going to start seeing that in earnings. So that's where you need to pay attention. So this is why there's different things, and you need to know where to look when the A happens, B is going to happen. And then if C happens, maybe X, Y, and Z may happen, right? So you need to know the different scenarios that could potentially play out and how that affects other, the supply chain issues and other different aspects of the market. So with all that being said, again, I will put out a weekly or a chart analysis, technical analysis here tomorrow. But until then, enjoy this one. Go ahead and like and share this one out there. Drop your comments down below on what your thoughts, ideas, and opinions are of the current market sentiment. And thank you for listening, and I'll catch you guys later.